Well, clearly the currency, the negative currency interest rates and the impact yields on a global basis and the impact on currencies is kind of new on a bell-shaped curve. On the other side, the present value of a future stream of earnings for companies that have any kind of visibility and not overly leveraged, they become worth more. So the market will be down 10% or 15%. That's a normal correction in the kind of volatility we've seen in the past 100 years. So what's different? Nothing. And you think about Warren Buffett, he's keeping his powder dry. So that's the good news.
When you say an opportunity to own businesses cheaper, what kind of businesses do you see those opportunities in?
Well, we like companies that are cash generators, but in specifics, we want to talk about a stock that's down 4 or 5 points today at CBS. I think the combination of CBS and Viacom and the pullback in the market today with all of the uncertainty over this marriage, we think that provides a very good opportunity. Concern over advertising, consumer expenditures, what's the consumer sector going to do? Is that going to impact advertising? How quickly can they rank their direct-to-the-consumer business? And are they going to overspend on certain areas like content to get more into the direct-to-the-consumer on a global basis? So those are the issues. Independent of that, I think you've got a very good opportunity in CBS over the next 5 years with their merger with Viacom.
So do you think, therefore, that a Netflix is expensive?
I'm sticking with how cheap CBS is. I am saying that direct-to-the-consumer, on a global basis, you've got 7.5 billion sets of eyeballs. You've got 4 billion plus of phones. Netflix, last time I looked, has 150 million, or maybe 160 million customers. I think there's room for a significant growth. In the case of Netflix, our household pays like $13 a month. In the case of some other CBS Access and Hulu, and those each unbundled. You give to the consumer what they want. Who's got the content? Who's got the sports? Who's got the news programs? And how much is advertisers supported? And these are simple issues, but you got to focus on them. And when we do the work on CBS, we think that Sherry Redstone is putting together a very good package all over again that they broke apart 13 or 14 years ago for different reasons, different world. And we think it's going to work quite well for the owners over the next year or two. And will they do other things? Yes. This is just the beginning of a lot of dynamics going on. What's Vivendi going to do in music? What's Sony going to do with their entertainment business? So, there are pluses and minuses all the time.
Is media and tech, more broadly, the most attractive place to you in the market right now? Or when you see something like financials or even energy has beaten down?
We are having our 26th conference on commercial and military aviation in a week. That area is extraordinarily. You're invited.
I'm going to take you up on that.
And then we have our 43rd Auto Parts Conference in which we're talking about used cars being hot, like buying cars through vending machines. We're looking at things as simple as, protein-based food with a company in Toronto called, not Toronto, but in Canada, called Maple Leaf. So there's always some significant, interesting things going on a global basis and in stock specific.
Mario, back to the broader markets. I know you were upbeat earlier that it gave you the opportunity to buy stocks you like for the long term at slightly cheaper valuations. But broad equity indices, do you think it's legitimate that they are selling off today and over the last 2 weeks of August?
30 or 40, some of your macro guys, tops down, are going to tell you 30 to 40% of the earnings of the S&P are non-U.S. Clearly, if you have an operation in Germany, even if they're selling 2% more widgets, the impact of the currency is negative. And that reverses itself out a year or two from now. In addition to that, the financials are a big part of the index, and you've just talked about NIMS, you've talked about other issues. I don't pay much attention to the markets other than the psychology that impacts the stock specifics. You have more algos, more momos, more quants dealing in stocks, less liquidity. So you have to be a little more nimble in terms of figuring out what a company's worth 2 years from now. Where's your margin of safety? And when a stock drops 15%, you got to step up, and that's what we're doing.
Mario, is this trade war between the U.S. and China the biggest worry right now for the markets, or do you think it's a red herring?
No, I don't think that the United States should allow intellectual property to be stolen under the future deals. On the other side of the coin, China is 16% of the world's GDP, and to the degree that they're growing faster, that has a multiplier effect on the global economies, and to the degree you slow down the multiplier effect. On the other side of the coin, I'm all in favor of free trade and fair trade, and so somebody has to arm wrestle. It was inevitable that someone would come to the table and say, hey, you can't keep doing that. And most of my companies obviously are going to re-examine their logistics, their just-in-time trade. How many are moving already to Vietnam? I was just reading a study about how many shoe manufacturers have left China to go to Vietnam. This is happening in a free market system. Will it be resolved? Yeah, somewhere down the road. The question is when and how. And I'm not unhappy with it. It just creates confusion and uncertainty.